India's record high unemployment is no longer news, but it remains an unresolved major issue that has become the root of many other issues in the Indian economy. There are many researchers proving that banks lending activity is directly proportional to the job creation in an economy. In this context, how do you see job growth in India?
Yes, I think again we need to make a conceptual distinction between unemployment and underemployment. Because I think like T.N. Srinivasan used to say, when you have a lot of poverty, when you're poor, you can't afford to be unemployed. So we have all kinds of, if you look at the unemployment statistics, 6%, 8% is not very high unemployment. But you look by, say, young people, it's very high with skills, because until a certain age, they're looking for a better, higher productivity job. When they don't get it, they settle for something which is might not be so productive. And we've seen with the migrants recently, that there are so many people who are moving from agriculture, low productivity, or try and get a higher productivity job. So it's actually about underemployment, improving the productivity with which people are employed. And that it's been one of the failures of our development model. We've not been able to provide large-scale, low-skill employment, such as by having large factories, economies of scale, which would be productive, which would help allow us to export, compete in the export market also. So as I said, now this diversification of firms from China gives us an opportunity. And long-term reforms to reduce the cost of doing business, all this subsidy, because a lot of our subsidy structure was designed to raise costs for business, for example, and hurt the environment. The example is, this diesel being cheaper than the subsidy, diesel subsidy. That led to and railways charging higher price for freight to subsidize low-cost tickets for 8%. So that meant that freight traffic diversified to road from rail. And it was cheaper in terms of resource cost. And then it hurts the environment. It raises, we are importing oil, so it makes our balance of payment adverse, all kinds of costs. That's the way, this again, free electricity to the poor, stealing of electricity, and very high electricity charges for industry. One of the highest in the world. And how can you compete in the export market? So all this, now you change, you give a direct subsidy, DBT to the poor, you charge for electricity, you don't charge firms to, And so we are innovative, new kinds of meters that allow you to measure electricity. All these issues, there will be a lot of improvement, which will help reduce, because one of the ways to increase employment is reduce costs of doing business. Let large economies of scale occur, which also reduces cost, which makes you competitive in exports. But you were talking specifically about bank lending. So here also, I think a lot of the bank lending say that it was much higher in the 2000s. And growth, so we won't have growth. But we need to realize that in the 2000s, a lot of the lending was to large infrastructure, finance large. It was a fundamental asset liability mismatch, because banks were borrowing short-term deposits, lending long-term. And they would not be able to turn this over. Actually, that time it was thought that there'd be takeout financing, financial sector would develop and they would be able to turn over these loans. But it didn't happen because of the global financial crisis and the whole thing crashed. And so we were left with this problem of large NPAs in banks. So now, as I said, this reform, banks are now doing credit-based lending. They're lending more to retail than to firms. Firm loans are largely working capital, not the big infrastructure loans or huge loans to, say, Kingfisher and that sort of thing. Large exposure to one company, no. We are lending to MSMEs, but that is diversified. So even if there's an NPA, one firm closes down, it's not going to be thousands of crores that, So you're not going to see, and a lot of firms are deleveraging also. They're actually cash rich. And they're preferring to raise equity, which is a lot of money is coming in, or borrow abroad where interest rates are low, or borrow through corporate bonds. The corporate bond market has also developed. So because the financial sector has diversified, now there are other sources of finance. And that's healthy, because banks lending for infrastructure is not healthy. It's setting them up to fail. Yeah?
True.
There's
Yes.
asset liability mismatch. So I think that we have sufficient reforms. Like currently, if you see the very latest data shows the overall credit growth is not large still, and we have a very low credit deposit ratio compared to most countries. We need to increase it. But you're seeing a large rise in retail loans. Even public sector banks are focusing on that rather than lending to firms. Yeah? If you just look at
Yes.
retail loans, there's a big turnaround. If you look at
Big.
non-bank food credit, compare, say, from November this year up to November to last year, there's been a turnaround, a large increase. And also increase in qualified placement of corporate bonds, private placement, of corporate bonds, commercial papers, other kinds of equity IPOs have risen recently. So other kinds of sources of venture funds are coming in for firms.
True.
So it's not that bank credit is the only criteria, but banks are lending more to private parties, to households for consumption. And NBFCs are also there. They were doing a lot of consumer credit lending. Now there's a turnaround in housing finance companies. You're seeing a rise there. And you're seeing some movement in real estate where a lot of assets were just stuck. They're not able to sell. Buildings were in trouble. So you're seeing a turnaround in these sectors, which is very good for the economy. So these things start gradually and then they build up, as long as policies are correct and they don't bang everything shut. Like they did in 2010. So we should see it grow gradually. And there will be shocks, but as long as you stabilize your policies, compensate. That's what macroeconomic stabilization is essential. But there is some automatic stabilization also, which comes from diversification. I keep saying that for the Indian economy. But you reach a level where look at the last year. Industry was absolutely shut down with the lockdown. The rural economy was doing well. Exports of service, high tech continued, the outsourcing. So you have one sector doesn't do well, others are compensating. That is a natural portfolio diversification, like you say in finance. That helps the economy survive shocks. So I think we are in a better place going forward.
Yes, because I think COVID is one of the positive we can see about COVID is agriculture growth rate. And that is quite phenomenal initially.
That as well as diversification from China. So many countries have realized they should not depend too much on one country. Even our own industry. Like I like to say that we had an import substitution regime which killed industry, before reforms because they were too comfortable, they did not compete. But after liberalization in the 90s, what we had was import competition. This industry cost was very high and they were asked to compete with China, which is subsidizing its industry. So our trade deficit with China jumped to, $60 billion or something it was recently. And little things, and we didn't allow economies of scale because of labor laws and so on. So industry just could not compete. So now you're moving to what I call an export competition regime, where firms are encouraged to export, so they have to be competitive. Reforms are taken to reduce their costs. We have an opportunity to attract global supply chains and build large economies of scale. And so finally, we might get, a large growth in exports and large employment creation.
True, because we have widened our horizon. And that we have seen in our economic survey, wealth creation, network product, global supply.
Yes, all that you can have cumulative large jump in growth.